I do think people have to be aware it's not a straight line. Post bust, because of what I see coming as a huge commodity cycle, post bust, I think silver could get to $500, gold could get to 20,000. But people just have to understand it's not a straight line. There's this bust in between. As I say, I think gold looks great here. I think it's about to break out. That's obviously made a new closing high this week. And I see the dollar rolling over, interest rates after a backup beginning to um, move down again. And I think they'll go to probably go towards 3% before they correct again.
DavidHunter is a veteran contrarian macro strategist, boasting an illustrious 5-decade career on Wall Street. In this video, DavidHunter anticipates a looming commodity cycle, forecasting the possibility of silver to surge $500 and gold skyrocketing to $20,000. In his assessment, DavidHunter notes gold's new high and perceives a shift in the dollar, expecting it to boost gold's rise. Analysts at ANZ Group warned that the yellow metal could pull back further in the short term, but hiked their year-end target for bullion. Spot prices hit a record high of nearly $2,200 an ounce at the beginning of the week, buoyed by persistent bets that the Federal Reserve will begin trimming interest rates by June. Embarking on a unique perspective, David underscores silver's lackluster performance since 2011, punctuated by intermittent periods of positivity. Since reaching an all-time high of $49.51 per troy ounce in April 2011, silver has continued to fall, struggling to recoup even half of its gains. The highest price of white metal in recent years was during the COVID-19 pandemic, when it hit over $28 in May 2021. On the contrary, gold-silver's more popular rival has repeatedly broken its record price in 2023. Despite attributing some struggles to the strong dollar, David maintains a cautiously optimistic outlook on silver's future. In his view, David considers silver as the poor man's gold, recognizing its allure as an investment and industrial utility. Concurrently, he further anticipates a silver resurgence, especially with its demand in sectors such as electric vehicles. As more electric vehicles are sold, the demand for silver increases. The automotive industry will require more than 90 million ounces of silver annually by 2025. Apart from its use as an investment, silver is a strategic metal with a wider range of industrial and medical applications compared to gold. Only 10% of gold output goes to industrial use, while over 50% of silver production is used in industrial applications. Now, we present the clips of DavidHunter's insights from his recent interview with Commodity Culture. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
So you've got the dollar and interest rates working in the right direction for gold. And I think that's a signal that gold's about to break out of this trading range it's been in for quite some time. And, my forecast is 3,000. I've got a forecast of a global bust starting probably later this year into next year. And I just called a pre-bust forecast of 3,000 on gold. And to me, that's a conservative estimate. I think, if anything, it's going to exceed that. I think silver still is poor man's gold. So it does have some of the characteristics of gold, but it also does have more of an industrial, piece to it. So, yeah, it's been, I think it's an understatement to say it's been a disappointment. It's certainly been kind of the asset that has just not performed for a long time and has disappointed lots of us, including me, over a long period of time. I do think you have to kind of step back, though, and realize, because I think a lot of the bears on silver, or those that were bullish and got really beat up by it, they think it's been, since 2011, nothing's happened. Well, you had a pretty good run in certainly the silver miners and in silver in 2016. You had a very fast, big run coming out of the pandemic, March 2020, ran to August 2020 with a really big run there. And then from there, it's been a really difficult slog. So it's been consolidating. A lot of the problem, I think, has been the dollar. Just, silver gets hit a lot harder than gold when it's, in that period of strong dollar. So I think it's all set up now where you've come down to some very important support lines technically, where fundamentally silver is, because of EV, et cetera, silver is going to be in demand. There's, it's a metal that's going to be in short supply, and it does have the characteristics of when gold runs to 3,000, it's going to get a bid. So I have a pretty aggressive forecast pre-bust again of $60, which may seem unbelievable given what we've dealt with this last decade, but $60 between now and the bust. And then, and I've said if it breaks above 60, you could run to 75 very quickly. So 60 is my target, but 75 wouldn't surprise me. And then it will get hit harder than gold in the bust. So what that means, if we, you don't know whether we're going to 60 or 75 or 50 or whatever. If I'm right, it goes to 60 plus. You could see it back here certainly, in the bust. And given it's, how easily it can move down, you might even see it down into the teens. So I do think people have to be aware it's not a straight line post bust because of what I see coming as a huge commodity cycle. Post bust, I think silver could get to $500, gold could get to 20,000. But people just have to understand it's not a straight line. There's this bust in between. As I say, it's like standing on the south rim of the Grand Canyon and looking across to the north rim and thinking you can walk straight across. And obviously you can't. We're going to have that big canyon in between. So, those that think you want to own silver or gold and just hold it right on through, particularly silver, understand what you're doing if you do that, because it's going to be painful.
DavidHunter analyzes the technical charts, predicting a rapid decline in the dollar that will significantly boost gold and silver prices. Gold prices rose on Wednesday, buoyed by a weaker dollar, as investors held on to hopes of a June rate cut by the Federal Reserve despite a hot U.S. inflation print. Escalating geopolitical tensions kept bullion's safe haven demand intact. Over the past 20 years, the U.S. dollar index has traded across a wide range, from 120 to a low of 71. The index started in 2000 at 101.60, before rising to 121 in August 2001. The DXY then fell over the next few years, reaching a low of 71 in the financial crisis of 2008. With a cautionary tone, David mentions the risk of soaring double-digit interest rates and inflation, posing a threat to the dollar's stability and potentially dipping below 50 on the DXY index. Let's get back to the interview.
The charts, the technicals suggest that it's rolling over, and I've expected that. We had that big move down a couple of years ago from 115 down below 100 on DXY, and we've spent many months here kind of consolidating that. It started to go again, and then it had another counter trend rally. I think that counter trend rally has pretty much run its course, and it just looks now like the dollar's getting heavy. And once it gets going, I suspect we'll see it down to the mid 90s pretty quickly. And then from there, down to 90. And from there, I have a forecast again, probably a 2024 forecast of 80. So, from 103 and change now, down to 80 is a big drop. And that will certainly help gold and silver. I certainly think the dollar will come under pressure in the second half of this decade. You get through this global bust, and I think that will be the peak in the dollar, and it'll be all downhill from there. How fast is hard to know because this is going to be a global bust, and as we know, when we catch cold, the rest of the world catches pneumonia, and this is going to be us catching pneumonia. So the rest of the world's going to be in really rough shape. I just don't see where China, Russia, or anybody else is in a position to replace the dollar as a trade currency. So they can talk about it all they want and try to plot against the dollar all they want. I think it's going to be a long process. So certainly the next 5 years, the dollar's still going to be, the king of the hill in terms of trading, in terms of trade. As we get to later in the decade, I'm forecasting a huge inflation cycle as a result of what the Fed has to do, and also central banks, frankly, have to do during the bust to counter the bust and pull us out of it. It'll be a free falling financial system during the bust. And so they're going to be printing and printing and printing. Probably my estimate is be something 4 or 5 times what we saw in 2020, 21. So I mean, 20 trillion coming out of the Fed is my estimate. Could be a little less or more, but that kind of number is going to trigger, and all central banks doing something similar proportionally. That's going to trigger a huge inflation cycle that will far surpass, I think, the early 80s, and certainly what we've seen of late. And so as you get to the end of the decade, you could be looking at, high double digit interest rates, high double digit inflation, and a, obviously a budget that can't be serviced, or we're going to really struggle. Again, it's a worldwide problem, but focused on the U.S., I think we're going to have a hard time making the case that the dollar is something sound and where people want to be. So, later in this decade, I think the dollar is going to be under a lot of pressure. You could see it that DXY could be under 50 by the end of the decade, and then keep going from there. So I understand the concerns about de-dollarization. I understand all of that. I just think those that are in that camp and think it's something that's coming very quickly. I think it's quick in terms of history, yes, but quick not in the next year or two.
Looking ahead, the analyst acknowledges concerns about dollarization, but expects the process to unfold gradually, not abruptly, within the next year or two. Considering an annual growth rate of 11.2%, an ounce of gold could be worth about $2,251 in 1 year. An ounce of gold could be worth about $3,441 in 5 years, provided that the value continues to grow at 11.2%. With precious metals' potential to shine brighter in the coming years, how do you envision incorporating them into your investment portfolio amidst evolving market conditions? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.